I'm starting to be a believer for the first time since 2012. We know there's currently a limited supply of 21 million Bitcoins to be released.
Of gold, it has been a very strong performer this year. Can it go higher from here?
It probably should. You know, gold's been very strong, but we still get these sudden sell-offs, which make me wonder if the central banks sometimes come in and they're sellers at these higher levels, because they have bought substantial amounts in the last few years. My theory is that certain stocks and asset classes will now move beyond the ability for smaller investors to own them directly. You know, things like residential property, gold, these will only really be owned by the rich going forward. You know, how many people can afford to buy one Bitcoin if it's $73,000? We're suffering at the moment from, there are no good new politicians coming through. Some big players have been building their holdings of Bitcoin for years.
And it gets people thinking, should I sell? Should I buy more? Should they get involved in crypto?
Some people have no problem in buying the highest high for it to go higher. And they kind of shut their eyes and say, okay, I'm buying here at 73,000 because it's going to 150.
Welcome back to another episode from your number one show, TIC Talks, the show that brings you inspiring stories from people who've made a mark in their respective fields. Today, we've got a legend in the market who's made his mark for a very, very long time, even before the internet. So welcome again, Tim. How are you doing, buddy?
Good.
The last time we done this was last year around this time. And a lot has changed in the market, a lot has changed in tech, a lot has changed in the world as well. So where shall we start from?
It's been a kind of interesting time, right? It's a period of transition, and most important, 2024 is the year when we'll have elections in the USA and the UK, right? We have uncertainty, right? Which can often mean markets are confused. A clear trend is not yet to emerge, but that's a trading opportunity, right? I mean, if I look back over the last year, investors in TIC strategies have enjoyed a great run. I mean, one of our algo strategies is up over 38% last year.
Let me correct you. Over 39.9%, which makes it, if you round it up, it's already 40% last year.
Wow. I mean, what was most exciting for me was to see these strategies make money steadily without big losses, and in mostly sort of range-bound markets, right? That means the algos have learned to trade in those markets, and they've fine-tuned their trading for uncertainty. So I think there's another great opportunity here for great performance again in 2024. So even if trading had to become a bit more cautious around the time of the elections, which will probably be at the end of the year, you know, the US elections in November, we're still trying to decide, Rishi Sunak's still trying to decide when he'll go for it this year, but it's probably going to be October, November. So we've still got like 7 or 8 months of great trading conditions to come. So I'd advise anyone who's thinking of investing to get in now. You know, many of our investors are increasing their sum invested and reinvesting the profits they made last year.
And on top of that, investors can diversify their funds across different algo strategies, even human strategies, right?
Yeah, you can choose basically. And it's great because you get to act a bit like a portfolio manager. You can look at some strategies that maybe have been a bit more cautious in their trading, but still producing 15, 20%. Or you can go for it and go a little bit riskier, and that's targeting the sort of 30 to 35%.
And the beauty about these algos, so we've got the 40% that was made out of the palm, right? But if you look at the algos for the small accounts from 1 to 5K, they made a lot more over that. So some clients, they wish to diversify their funds. Maybe they will select the Euro USD algo, right? For 2K minimum for the algo, for risk management rules, of course, and then they diversify the rest of the bigger size of their funds into the palm, which is a lot safer, less drawdowns, and it's designed for long-term investors.
We're probably going to get some demand from a few small institutions that want to have their money managed. So, you know, I think it's going to grow. The PAM is just a great growing, you know, what will eventually become a fund, really.
Absolutely. And at the moment, we've got $4.7 million in the palm. We've made tremendous progress since last year, in particular since the last time we had this podcast, me and you. It's mind-blowing to see the progress we've made. The future is really, really looking bright. So a lot has happened, like you said. Let's start first of all with interest rates. Have rates peaked now globally? Can we say that?
The whole world certainly hopes so. Companies are paying more to borrow money. I mean, our own credit cards and mortgage lenders are charging us higher rates. But all of this is because the central banks raised rates to combat inflation. Now the market believes that inflation has been tamed. It wants lower rates. It's trying to pick the moment when the central banks will start cutting. So in the USA, they're projecting 3 rate cuts this year. In the UK, the Bank of England governor came out and said rate cuts are coming. The Swiss even started cutting rates this week. But in Japan, they raised rates recently because their rates have been historically low for ages, and they need to realign with the rest of the world. So the one that matters the most, of course, is the Fed, and Chair Powell still seems to be a little bit cautious, saying rates will remain higher for longer until they hit their 2% inflation target. Currently, inflation is just under 3%. So we all watch his post-decision press conferences really closely, and the markets hang on his every word to try and detect changes in US policy.
Everything is more expensive. Does that mean prices will go down? Because it doesn't seem like it. Let me tell you that.
No, everything's expensive everywhere, right? I mean, when you hear about inflation being 3% or 2%, remember this is a number that tells you how quickly prices are going up. So when inflation falls from 10% to 2%, that doesn't mean that prices go down 8%. It just means that the rate that prices go up is slower. So in every country, the price of goods and services has gone up. Just because the rate of inflation has now slowed, that doesn't necessarily mean that prices will come down. But we are starting to see food prices fall a little in the UK, for instance. I mean, I personally think we'll have a kind of choppy period where inflation is just above the central bank's target of 2%, and it will be kind of sticky and it will be more difficult to bring it down under the target.
Yeah, well, what will be the effect on currency markets of the election in the US and UK?
Well, election years are often difficult, so often the markets could stand aside and just wait for the results to be known. I mean, in the USA, it's a rerun of the 2020 election in November, Trump versus Biden. We kind of know what we were getting from both these two old guys, but the market remembers what happened at the end of the Trump presidency when there were the riots, right, and the storming of the Capitol. So probably no big effect on the dollar from the result, which means range-bound markets. Now, that's not a disaster. As we know from our algos, they like range-bound markets. In the UK, it's likely the Conservatives will lose after 14 years of governing, and Labour will be the winner and back in power. People want to change, but there could be some uncertainty around what Labour will do, so maybe a little bit of pressure on sterling. But Labour's gradually revealing its policies. It doesn't want to reveal them all until the election's declared. Now, that election must be held before the end of Parliament in May 2025. So most people are betting on October, November this year. So as we said, uncertainty, it's not always bad for trading. It leads to range trading, which our algos strategies love. So I would see that we'll probably have steady profits over the next 7 or 8 months until the US election. And then if Trump wins, things may get a little bit more volatile. By then, we'll have had a good year, so we can afford to step back and bank our profits and look forward to the markets getting steady again.
Maybe some of our viewers or listeners are wondering who would rather have win the election in the US, Trump or Biden again?
Mr. Biden looks a little old, doesn't he?
Whoever is better for the market, you think?
Whoever's better for the market. I mean, Trump certainly, if you remember, made markets move. He was around when COVID came and the stock markets fell. He said, look, these markets are going back up again. And he did everything to push them back up, right? So they often say that Trump is good for business. He may be radical and he may be looking to, extend his stay beyond his welcome or his next 4-year term, but he was good for the stock markets and he was good for volatility. I guess a lot of people before, I mean, I talked to banks back before the Trump election in 2020, and those banks just would not believe that the guy who ran a TV show could be the president of the USA. And I said, no, you've got to prepare for him coming in. And they were shocked and lost their bet to me. Never paid me, actually, yet. But that's another story.
Which proves nothing is guaranteed in life, but everything is possible. So never forget that. And yeah, Trump was moving the market with tweets every other day. But just a personal question for you: who are you gonna vote for in the UK?
I voted the first time in 1979 for Margaret Thatcher when she got in. And I was 19 and I could vote for the first time in this country. Every other election, I've either missed it because I was working abroad or I didn't want to vote. Once I voted Liberal just to try it out, and that didn't get us anywhere. The Conservatives got in again. 1997, when Labour was elected, I thought that was good. But, by 2010, people have had enough of Labour and Conservatives got back in. I think we're suffering at the moment from there are no good new politicians coming through. There's no
Yeah.
younger people coming through that are strong yet. There's probably a lot of them out there and we haven't heard about them, but they're kind of pushed back. I mean, I think Trump is 77, Biden is 80. Don't tell me they don't have another good candidate somewhere in their party. But who would line up against Trump? All of them fell, right? Eventually, Nikki Haley, who kept going forever, had to drop out, right? Because he was just the best candidate that
Yeah.
everybody thinks they can get elected. So often the party will pick the leader that they hope gets them elected. So Boris Johnson is a great example, right? He was
Absolutely.
a strong leader because he was a character and he pulled in the votes and he got the Conservatives elected. Since then, we've had Liz Truss. Oh my God. And we've had Rishi Sunak's a good guy. He was Chancellor during COVID. He got us through that. But he's been handed this terrible situation, and maybe we're just due for a change. So, in answer to your question, I'll probably vote Conservative, but we'll probably lose.
Let's hope for the best. Let's move on and talk about the US equity markets. Have the US equity markets taken off in the last 6 months, and are they hitting all-time highs? If so, can this last?
Well, we must remember that stock markets always project at least 6 to 9 months forward, right? So it was logical for them to start buying stocks in Q3 of last year in anticipation of interest rates coming down. If you remember at that time, they thought the first rate cut would be in January, right? And rates coming down is traditionally supportive for equities. The US economy has proved incredibly strong, right? Which boosts earnings for companies, and so stocks go up. I mean, we've had this tremendous rally in AI-related stocks. If you remember last year, we started talking about AI at the start of the year. We said 2023 will be the year of AI. So as we predicted, the rally was led by NVIDIA, which seems to be constantly announcing new chips for AI. Everything is going to be faster, better. So more and more data centers, more and more of these new chips. So tech stocks are trading at all-time highs relative to the S&P 500. I mean, even surpassing the peak of the dot-com bubble, if you remember back to that.
Yeah.
So all these US indexes have made new highs, but have they gotten ahead of themselves? There's kind of a feeling, if you listen to some of the channels like CNBC, that we're due for a correction. But in general, that stock markets can now live with what they call higher interest rates when they're talking about it, because they did for so many years before the Great Recession and COVID pushed rates to artificially low levels. They lived with rates at 5-6%, and stock markets still went up, right? So my theory is that certain stocks and asset classes will now move beyond the ability for smaller investors to own them directly. Things like residential property, gold, Bitcoin, AI and tech stocks.
Yeah.
These are things that people are interested in, but these will only really be owned by the rich going forward. How many people can afford to buy one Bitcoin if it's $73,000? As these assets become tokenized and go on the blockchain, you'll see smaller investors will be able to own a tiny fraction of each of these things. And so, products like the PAM and stuff like that will be able to take on these asset classes and offer trading in it for the smaller investor.
Yeah, speaking of gold, it has been a very strong performer this year. Can it go higher from here? I mean, I met someone the other day and he told me it could go above 3,000. Do you reckon that will happen?
It probably should. Gold's been very strong, but we still get these sudden sell-offs, which make me wonder if the central banks sometimes come in and they're sellers at these higher level, because they have bought substantial amounts in the last few years. Uh, Gold remains the traditional hedge in time of global conflict. So Israel, Gaza, and Ukraine have certainly added to the buying. I think for medium to long-term investors, gold is a good investment, but you need to be patient. So if you were taking a portfolio investment approach, you might hold 75% of your money in gold for every 25% that you put in Bitcoin or something else, because gold is less volatile than crypto. If you were doing it on the FX side, you might say, okay, I'm going to put 25% gold, 50% in FX, and 25% in Bitcoin, because that would balance out your portfolio a bit. So yeah, gold is good. It probably should go to 3,000. If Bitcoin's going up, then gold should go up alongside it, right?
I mean, Bitcoin been taking over gold this year.
I mean, there's a lot happening in crypto. Bitcoin's very interesting to me in 2024 because I come from a banking background, an institutional background, and we've seen the first ETFs authorized by the SEC in the USA, which was a major factor in its rally to 73,000 recently, above the previous 69,000 high. It means that institutional investors can invest in an ETF in a vehicle that they trust, which then invests in Bitcoin itself. It's not like you're investing as if you're a bank and you're investing in an ETF or a fund manager, you're not buying Bitcoin directly, you're buying the ETF. So it's kind of like a derivative, which those companies like. I mean, I've been watching Bitcoin since 2012, when you could buy one Bitcoin for $250, right? I've seen it go up to 69,000. I've seen it fall back to 4,000, and then enter this new ETF era, if you remember, around 38,000 on the day. So everyone who's watching this, everyone in the world probably has a story about how they regret not buying Bitcoin. So I'm no different from anyone else, even though I worked in the industry. But recently I decided to kind of reset and review my core thinking. So if we take the view that Bitcoin, like a new currency would be, but all the price action that we saw before the ETF decision was kind of like a rehearsal, then maybe I can look at Bitcoin differently, a bit like the institutional investors who are investing in the ETFs for the first time. I mean, they clearly don't anticipate it going back below the level of 38,000. I mean, they even talk about 48,000 and 55,000 as support levels now. So I used to look at Elliott wave charts. So in Elliott wave charting terms, if we discount all that rehearsal price action and say the starting point is the recent rally from 38,000 to 73,000, that could be wave one. And now we're having a corrective wave back into we're under 65,000 again. We're sort of been moving sideways the last 2 weeks. Where could wave three take us? Wave three is normally the longest wave in 5 waves, right?
Yeah.
So that could take us substantially higher. I mean, that's why you've got some commentators who are talking about 120,000 or 250,000 as targets in future years. I mean, Bitcoin's different to other currencies or to gold or other assets. It's got a scarcity value. We know there's currently a limited supply of 21 million Bitcoins to be released. Now, that's unless, of course, Satoshi suddenly reappears magically and says, hey, here's another 21 million to play with. JP Morgan CEO Jamie Dimon made a joke at a recent conference about this. He's not on the fence about Bitcoin. He's either for it or against it, depending on which conference you watch him at. But there's this thing called the halving event coming in April. Halving means the miners who create new blocks on the blockchain will earn less for each new block that they create. So in the interim, they're putting lots of new and old hardware to work to secure the higher fees before those fees go down. Now, this means that the halving date is actually being brought closer. Originally, it was April the 28th, but now, because of all this extra activity, it's the April the 15th. So watch out for this. If you're thinking, oh, I'll wait until after the 28th, now you should already be thinking, I need to move before or after the 15th. So in past halving events, they've waited until the halving happens, and then there's been a rally in Bitcoin. But this time, is it different because the rally came before? We did have the ETF news, which we didn't have under previous halvings, right? So what if a real rally comes after the halving again? That again could fit with the theory of like we're getting to the third wave and we really power higher. Now, some big players have been building their holdings of Bitcoin for years, none more so than Michael Saylor at MicroStrategy. He's been borrowing huge sums of dollars to buy Bitcoin. If you look at his holdings compared to others, he's now got a total of 174,530 Bitcoins, which
Wow.
in February was estimated value was $9 billion, right? So he's the biggest holder around the world. So watch out when you see him on CNBC and stuff like that. He's super confident at the moment. He's like, well, his average price that he bought all his Bitcoin is about 34,000. So that's why his current valuation at 65,000 is so huge. I mean, his argument is there's only so many Bitcoins to be issued. So why would I ever sell any? So this year will be really interesting to see if he's right. But when you see him on TV, he looks super confident at the moment.
And it gets people thinking, should I sell? Should I buy more? Should I get involved in crypto?
You know, some people, and this is where different styles of trading and different trading mentalities comes in. Some people have no problem in buying the highest high for it to go higher. And they kind of shut their eyes and say, okay, I'm buying here at 73,000 because it's going to 150, right? Those of us who've been trading a bit longer, we're a bit more cautious maybe. We've seen things go wrong. We know that, you know, you hit a new high and then you have a retracement. But if you look, the retracement since 73,000, it hasn't been very deep. I was hoping it might come back to 58,000, something like that. It could still happen in the next, 2 weeks until the 15th of April, and that date may come closer. But is it going to happen? If we are really bullish, if something really is going to go up in value, the retracement should be shallow, right? It shouldn't go down dramatically. So if I've started buying here around the 63,000 mark, yeah, just buy maybe 10% of my position and hope to add some more. And even if I have to add more when it goes through 73,000, at least I have something here at 63, 62, 60. If it falls to 58, I would just add a little bit more to my position. But if you're going to buy Bitcoin, you have to be a medium-time investor, not a short-term trader. Even the guys that try to trade it intraday get whipped around because the market makers, once they get going with it, can manipulate it. But yeah, generally, I'm starting to be a believer for the first time since 2012.
Yeah, what a time to be alive. So finally, what to watch for going forward?
Well, I was thinking about this earlier. I always watch dollar yen because there's still a premium in interest rates to hold dollars, where the interest rate is 4.5% over Japanese yen, where the interest rate is now positive 0.1. So that sort of keeps the dollar yen rate strong. And the Japanese, they like a weak currency because it helps their economy. So they like, easy monetary policy. So when they put their interest rates up, they were like, we're putting it up, but only so that we start to realign with the rest of the world. You don't have to worry. It's still an easy policy, right? So dollar yen, it's kind of up against the traditional resistance where the central bank, the Bank of Japan, came in last year, 151 to 152. If US rates do start to fall, I would watch out for dollar yen to fall back under 140. So these are maybe good areas, again, to just take a small short position and see what happens. Next one, Bitcoin. Yeah, as we said, if you have to buy Bitcoin at these highs, be a medium-term investor. not a short-term trader. Hedge with gold, maybe in a ratio, we said it before, 75% gold, 25% Bitcoin. When you hear inflation is falling, when they say, oh, inflation is down, don't expect everything to come down in price. As we said earlier, it's the rate of price rises that's going down, not the prices themselves. So, don't be thinking that your rental is going to go back to the same level it was last year. Don't think that your supermarket shopping trolley is going to cost you what it cost you last year.
No chance.
The big one for me is, if the future is AI, think of how much power will be required to run those new, bigger, faster chips in the data centers. The UK is about to spend £80 billion over the coming years to refurbish the national grid. That's the power grid that you see on the pylons that carries the nation's power supply. So all of the nations that want to compete in AI are going to have to spend money increasing the power supply to data centers and to places where AI is going to run. So companies that take part in these kind of infrastructure projects, AI and data centers, they'll probably make huge profits in the next 10 years.
Brilliant as always, man. Thank you very much for your time. That was really fruitful. We should do this more often from now on, because it's been a very long time since we've done the last one. Thank you so much for your time again. And we look forward to having another successful year at TIC together.
You got huge potential. TIC's doing everything that we set it up to do. It's providing a very stable investment product for people that haven't got time to do trading. Trading is fantastically interesting. Markets are interesting, but we're all busy with our own lives and working, right? I still think the TIC algo strategies are a great place to put your money if you want to invest for the future.
Absolutely, and that's the beauty about the solution we provide here, is to allow investors or traders to trade hands-free without having the experience all the time, and everything is done for you under low risk management approach. And this system we're talking about got a real and verified track record for the last 3 years. If you guys are interested in finding out more, please get in touch now with our support team, and we'll be able to help you. Thank you again, Tim, for your time. And guys, before we end this episode, make sure you like, subscribe for more, and here's more content. Thank you.
Cheers, guys.
Well done, Tim.